Hello, everyone. Welcome to REI Doctors Podcast. We have a excellent guest today, Dr. George Ozoude. Dr. Ozoude is a board certified orthopedic surgeon specializing in sports medicine and CEO and founder of Time Health Capital. Dr. Ozoude invests in a portfolio of quality real assets from large multifamily, medical office, oil and gas. He has been a limited partner in real estate deals since 2016, totaling over 20 deals, 4,000 plus doors, and $1.3 million of allocated capital funds. He is also a co-general partner at 13 Doors and Counting. George is a member of the Real Estate Guys Syndication Mentoring Club since November 2021. Welcome, George, to REI Doctors Podcast.
Thanks, Raj. Pleasure to be here.
Why don't you tell me something about your journey so far, how you ended up here?
I am an orthopedic surgeon and sports medicine fellowship trained. I did my residency in Chicago, University of Illinois, and I did resident fellowship here in Houston at Baylor College of Medicine. And it was a combined experience with the University of Texas as well. So we had faculty from both sides, both universities. I joined the faculty with UT following that fellowship and was employed with them for 8 years, working up in the Northeast Lake Houston, part of Houston, Humble, Kingwood area. I had a great experience with that and realized that I wanted to medicine in a different way compared to the corporate medicine model. And 2021, I started my private practice. We opened doors in January of 2022. So as of now, it's our 1-year anniversary 5 days ago, and made a specific model. It's a direct pay free market model where we just deal directly with patients or employers and directly contract with them. And so this bypasses the insurances and other red tape that I felt kind of got in the way of good quality patient care and good physician career satisfaction. And so I've been doing that for a year and learning a lot, not only just new things as a business owner, but in a very niche model that's kind of not been done here in Houston before. So learning a lot and growing every day for sure. And I'd say about 4 or 5 years ago, I kind of had this, writing on the wall realization that that's where I was going to head. And I knew I needed to get passive streams of income in order to, make that transition as smooth as possible. And in order to decorrelate my living expenses and my living income from what I do clinically. That was really a foundational point for what I was trying to do, that financial freedom where I can just practice medicine without any other influences. And so I started looking at different asset classes to invest in. I looked across everything, from stocks to venture capital with businesses, and then really finally settled on real estate because at the time I was a busy surgeon. And I felt real estate was the most slow moving, least volatile of all those other asset classes and had the best track record. So I made a investment into a surgery center that I used to work out of, then started making some investments into multifamily after spending a year researching and networking, learning from podcasts and audiobooks. Found some groups that I got comfortable with and started making those passive investments. And the goal was to build up my passive income stream to replace my starting physician salary, and created a whole timeline for that and had an idea of when I would be able to exit based on the frequency of investments and the type of returns that I would expect, conservative returns, and really got shortened on my timeline due to COVID. COVID kind of accelerated many things for many people. And so that accelerated my timeline as far as when I wanted to exit. So exited mid to late 2021. And now has that free time, that new added time has given me the opportunity to go deeper into real estate. And last year I landed my first co-GP spot with a partner of mine. And so now that's kind of on my goals for the next years to decades, is to operate deals in the form of investor relations and capital raising and asset management, and helping out very skilled and talented operators and bringing other physicians into those opportunities. And that's where I am now.
That's really great, George. Listening to you, it's clear you live a very well planned, structured life. I think that's why you're able to do so many things. So Our audience may derive a lot of value from both your real estate experience and also your starting an independent practice. So you're employed in UT, good retirement plan, good salary, right? Very comfortable life. For someone in that situation, it can be very scary to make this transition where you're going out, giving up all that stuff. Of course, you planned a lot before you did that. It's in fact tied into other things like physician burnout, pressure to produce. You're treated not like a physician, but like a factory worker. You're just putting out products out there. What kind of advice do you have for other physicians who want to do this? And what kind of struggles of, I don't know if it was smooth sailing, probably not. What kind of things you had to face when you made the transition? And how did you
So
overcome those issues?
you're right. This is a growing issue for many physicians and healthcare workers, not just physicians. You can see by the nurse strikes in New York City, same forces and factors that are going into that. And I do think that, making that big decision is very important to define your why. There's the physician side of things, and then there's the patient care side of things. And as physicians, we go through rigorous training and we're able to take on a lot of stress and burden. So a lot of times I think we develop the mindset to just push through the corporate medical model. When you start to realize it's actually impacting patient care, this may be your big enough why to kind of force yourself to figure out some alternative solutions. And while I don't recommend anyone just jump ship, that's it's not impossible to do. You can find some providers who have done that and can speak on that. But I think making it a little easier for yourself and improving the chances of success can be achieved by building up your passive streams of income. This just gives you the confidence, the cushion, the time to kind of assess things as you make the transition, because you're going to learn so many new things about how to be a business owner, how to be, a marketer, things that you're outside of your normal wheelhouse of just clinical duties. So you just need just a buffer. You need to worry about as least things as possible with all those other things going on. And so where your food and gas is going to come from, you want to tuck that away. So building up your passive streams of income while you are an employee, I think is a great way. You're a busy professional. You have all these groups that you can passively invest with. They're talented. They're skillful. They will produce good returns. They're not 100% like any opportunity. There's no guarantee, but you can really leverage that, because once you vet them, it's all passive from that point on. And you can just repeat that over and over again. So that would be my first recommendation, is to build up your passive streams of income. And at that point, you have an option. You can even stay in medicine and maybe dictate how you want your practice to look on that side. Or you can leave and have your physician salary already replaced. Two key things to getting started with building passive income is getting educated and getting on your network, learning from other people. I think that is paramount. And I mentioned that before. Podcasts, audiobooks, going to meetings, going to conferences. I did this for a year before I made my first investment. So that would be my recommendation, is to get educated and start developing your network. I say be curious and be social. So yeah, as you make the transition, you're going to fail. You're now in an entrepreneurial. You got to turn off your physician mindset. You got to turn your entrepreneurial mindset, and you have to be ready to fail, but look at it as lessons. And definitely I've faced some failures. I started hiring process, hired office manager that just didn't work out, had to let her go 9 months in. And now I'm wearing all the hats where I was before. I had her doing so many things. Now it's all on me as we kind of grow back our balance sheet and our revenue to get to a point where we could start hiring again. So these are lessons learned. I started directly marketing to patients, but with this direct pay model, you actually need to market to employers. So I learned that from my first year. And now the marketing effort this year is going to be much more geared towards employers. So these little things, about running a business, learning different terminology. I ask my accountants questions all the time because I don't understand a lot of these things about billing and about documenting, different things on our bookkeeping. It's It's a lot, you know? So leverage all the resources. There's so many resources online, physician groups, consultants. There's so many different ways you can get the information. It's all out there.
A lot of times it's important to hear all the difficulties or challenges you face, right? It's not all smooth sailing. So that was really good to know. So
I'm
one,
going to add one more thing
Mhm.
because I just remembered the mental hurdles you're going to have to get over as an entrepreneur. You want to prepare your mind, body, your spirit. So, there's coaching, there's mindset things because the entrepreneurial journey is up and down. It's a lot of uncertainty. And to deal with that, you want to prepare yourself. You want to be as healthy as possible across all spectrums. So that's actually one of the most important things that I would say is get your mind, body, and healthy, to go through that journey.
That's a great point. One question off topic, because it's really interesting to me. So, what is the advantage for an employee? You said you're going to market to an employer. What is the advantage for them and compared to having going through the insurance company versus going through a direct pay model?
That's a great question. And that honestly is the foundation of this model is that the majority of citizens and people in this country get their healthcare through their employer. So this is an employer expense to deliver healthcare to attract employees. And this is usually the second or third most expensive line item on the employer balance sheet. It's usually after payroll is how to deliver healthcare benefits. And that the problem for employers is the same problem that everyday people are facing where the premiums are going up. Every year the brokers come back to these employers and they tell them about the increased cost. And it's over 50%. It's 50% over what they could be paying if they just directly contracted. So this is actually a huge value proposition for employers. A lot of them are already going through self-funded models because they just simply can't afford the insurance premiums. And they're seeing the value. They're getting direct contracts with primary care doctors. And those direct primary care doctors are actually keeping their employees healthier because they have this model that gives them more time for preventative services. And when patients do get hurt, these surgeries are expensive. And so we're able to, decrease the cost of surgical care up to 50% for these employers. And so a lot of them, especially in the medium sized companies, 200 to 5,000 employees, they've already gone self-funded. And this is a huge cost savings for them. And I think it only will increase this trend of going self-funded will increase as the economy goes through a recession, as premiums go up. These forces are going to push these employers who are entrepreneurs to find solutions and solve that problem. So this is how working with employers is a key part of this model.
Is there a association or a
Yes.
website or place where people
There
doctors
are
can
many.
find
Mhm.
information?
Absolutely. There are many. The best one, the probably ground zero location resource for this is called the FMMA, Free Market Medical Association. Was started by Keith Smith. He's an anesthesiologist in Oklahoma City. And he actually built out a surgery center that's only direct paying contracts directly with employers and patients. And he's been in clinical practice with this model for over 25 years and started the FMMA about a decade ago or more. And so they have annual conference coming up. They have a very wide ecosystem. Like I said, they're like the ground zero for the ecosystem. So I would start there.
Great, George. Let's get back to the real estate side of things. You had
Absolutely.
mentioned you researched for a year before you started investing. And of course, you have done multiple investment as a passive investor, which can be very useful for our audience. What is your process of vetting? What kind of due diligence you do before you select a particular investment?
Yep. There are many things to evaluate, but you just want to know that who is driving the ship is experienced, is trustworthy. And what I look for is someone who's had experience through ups and downturns, right? So someone who's gone through, 2008 financial crisis, even better if they've gone through the dot-com crisis in 2001, if they have 10, 20 years of experience and they can tell me the good and the bad and how they grew from the bad experiences. I actually prefer that type of operator. You know, Obviously there are other things that go into it. I look for growth markets. So population, job growth, economic activity and rent growth. These are all important things to look at. That just increases the chances of success of a project. Now more than ever, I'm looking more at the financing, how the debt structure looks. And so I'm using that to vet deals. If I'm comfortable or not with, variable rate debt or fixed rate debt. And by far, getting to know who the operator is the most important thing, because you can have all those other things in line. You can have a great market, you can have great debt, a distressed property, you get it undervalued. And if you just don't have the right operator or the team with the experience, they can still underperform. So I do that work up front. When you say passive investor, really not passive, right? You have to do some of that work up front. But after that, then you can kind of sit back and just see how that all plays out. Usually it should play out well.
Those are excellent points. When people start out, most people concentrate on the IRR or equity multiple or how much money is projected to be returned to them. What generally, when you start out, you don't realize is those are projections based on a lot of assumptions.
Yeah.
And then there is a person behind the assumptions. So they had to be experienced, like you said. So first thing, similar to you, what I do is first is operator, then the market, then the property. Right. So that's the order, not from the property, then go backward. So that's an excellent point to make. And you have now transitioned to the active side. How do you find the time? How do you balance your time between active real estate investing and having a very active practice? So
Right.
how do you
Yeah.
manage your time?
It's a very important point, because even though you're just starting out your practice and you may not be as busy on the clinical side, you're very busy on the administrative side. As a physician who's, not done business, you're going to be learning a lot. So a lot of time just goes into the setup and the organization, the operations. And you literally have to prioritize. There are a lot of moving parts in anyone's life, but it's the same thing that I've experienced in medical school when I first started. I didn't know what to expect. So I simplified a lot of my life and focused and prioritized. And slowly, as I got familiar and comfortable, I started building back other parts. So right now, a lot of my time is just either given towards the medical practice. I can just focus on that maybe in the morning. And then in the afternoon, I'm focusing on real estate. And I'm working on weekends now because I'm an entrepreneur. It's 8 days a week now, right? And so, the weekends are a lot of that time is now focused on both of those items, both of those priorities. And you sacrifice, you make a little bit of a, delayed gratification to kind of cut other hobbies out, cut other things out, but they'll come back. Just like in medical school and residency, they will come back. They will always be there. You just have to figure out how to time manage it around these new priorities a little bit better. So yeah, that's what I do. I spend 50% of my time with clinical work and administrative work for the practice. And then another 50% of my time is spent with real estate. So
So there have been a lot of physicians now who are really interested in real estate as a means of passive income, but are afraid or they don't know what they don't know. What
right.
is your advice for someone who wants to get into active real estate side? What are the options for them? So you can do single family rental, real estate syndications, medical offices. What is your advice for people looking into getting into real estate?
I think there's a couple of ways you can go about it. The riskiest way is to jump in. It's not impossible. Again, it's not impossible to do. You can jump in on your own, but it's just, you go a lot further when you work with other people who you know, like, and trust. So being an LP is probably the best way, because it's the lowest risk. It's the slowest moving. It's the most passive, and you can learn a lot of how the inner workings, the lingo, you have the time to learn that. So it's a great trade-off for anyone starting out. Even as an LP, you can friendly with the GP team enough to the point where they even allow you to sit in on some of the conversations that they're having with all the different stakeholders and vendors. You can just be like that fly on the wall, absorbing it all, going to the meetups, asking questions, helping them out, offering some volunteer assistance for whatever they need to run their operations, and you get that mentorship. And that's another way you can directly be a mentee and get mentorship from someone who you envision yourself coming in the future. You can just start to navigate the whole ecosystem and start identifying, oh, I want to be like that person. That's a doctor who's been practicing and doing real estate. I want to learn how he did it. And so you can, again, go volunteer any services that they may need to help their business, or you can even pay for that. That's not out of the question. There are some mentorship programs where you can pay for that opportunity to be around them. And, they're not all created equal. You definitely want to do your homework to figure out if that situation is right for you or if it's right at all. Some of them are legit, some of them aren't. And so you need to take time and determine if that's right for you. So there are a couple of ways to kind of learn how to get on the active side. I think those are very helpful.
Yeah, completely agree. So most of us, including myself, started off as a limited partner. Then you learn how it works. The other thing I also found in my own experience is you have to have a mindset change. But as a physician, you are like the leader of the team. Everyone around you listens to you. But when you go into real estate, you're again starting out like a medical student. So you have to learn. There are people a lot more experienced than us. You have to learn from them and have keep an open mind so that you can learn from others. So that's another mindset change which you have to have going into this and learning more, right? So you absorb different things. It's at least for me, it's exciting because I learned a lot of new things which had no clue about. So you have to have that mindset where you want to learn new things. That's
A
um
very good point. Yeah.
so have you had any days where you thought about like, hey, why am I doing this? Right. So
Abs-
because if you see social media, everything say, hey, it's all very smooth, it's all very fun thing. But I've had myself had days like, do I? Why am I doing this? Why am I going through all this process? And how long does it last for you? And then what makes it better? And how do you keep going?
right. Those days are coming. As an entrepreneur and business owners, you're going to fail. You're going to fail forward, hopefully, but those days will definitely come. You, like you mentioned before, when you're in an employed structure, it's very comfortable. It's very predictable to a certain point. Some may argue actually it's actually operative. Someone else is controlling that flow of income. It just so happens that you're in the good side right now, but it feels very comfortable. And it's the opposite on this side. It is, you have to learn how to get comfortable in the discomfort. And there has been times where I've just like questioning, like, why am I doing this? Like I can have it just so easy. I can just follow the blueprint. And you can also always go back to that too. I can still say tomorrow, like I'm done with this. Let me go find another employee job. So that pull is still there. It's always there. But I think it comes down to who you are, what you want out of life, your purpose, your big why. And so when I look at that for me, what really drives me is the quality of care that I can deliver to my patients. It's just a internal conflict with me to know that I can provide better care in this model and not so great as good of care in the corporate model. So that for me is a huge driver. And that just comes from my upbringing, cultural. My family, we're all medical providers. So it really means something to me to have that MD behind my name and provide as best of a quality that I can. And I see that independent practice intimately coupled with my real estate career because that just allows me to be a better physician. And so this is the big drive. This is the engine and all the fear and the discomfort and the judgment that really I suppressed it. It never goes away, by the way. You'll have imposter syndrome. We had it as doctors. You'll have it even more now as middle aged career shift into real estate. You'll get some imposter syndrome and it will never go away, but you can quiet it. What quiets it is the goal. It's bigger than the fear. That's how the way I look at it. The purpose is bigger than the fear. I can't let the opportunity pass by just because I'm afraid of being judged, and this is what pushes me to keep going.
Yeah. So you have a very clear big why, right? So that's the importance of big why. So it cannot be just, hey, I'm going to go into real estate. Real estate is not like an overnight get rich quick scheme, even though people make it sound like, hey, you go to real estate, you'll be a millionaire next day. So you have to have that big why apart from the money aspect of it.
Yeah.
Then you can keep going on those days where you feel down. If it's just the money, then you're always going to take the easiest path out and then get out. So there is a lot of fear right now. People, it's a recession, fear about what's going to happen to the economy. And people are in general holding back from investing their money. The inflation is very high. So how do you approach in this situation your own investing and what do you advise your investors they
Yep.
should be doing?
Yeah, I definitely think, there are economic cycles and we have to adjust to that. We cannot have the same blueprint game plan throughout the entire cycle, right? It has to adjust. I don't think that it's impossible to do deals right now. In fact, I'm raising for two deals and managing for two deals. I just think it changes. Your scrutiny goes up. You saying no more than yes, and then there's a flip side, a optimistic side. Like right now is a great time to build community and to learn, you know, because you don't have as many opportunities out there because of the nature of the cycle. So slow down, take some more time, increase your knowledge base, increase your network, go to more meetings and events. I think it's a great time to do that right now. So when the cycle does turn, you'll even be better prepared, right? You'll have bigger network, you'll have bigger vocabulary and a foundation and understanding. So you can still do deals now, just be a lot more critical of them.
If you have your systems in place, they're still applicable, right? The same systems you said before, operator, market, and
This,
also the actual deal. So
yep,
as long as it fits, I think it's important to have your investment goals and be clear about your investment goals. And as long as there is something which fits your investment,
yep,
I think you can still move ahead in this market. In fact, there may be a lot more good deals coming up this year, opportunities because of what's happening.
correct. And to that point, I would say, you know, you, you keep evaluating deals, you know, to not, you may not be doing as many deals, but you still want to be just looking at everything. That's experience. That's the repetition, that's maintaining the relationships. You don't want to go dark on the radar from all the other vendors, the brokers, the lenders. You want to still be engaged with them, having conversations, even though you may not be doing as many deals. So same thing with the LPs. You want to be talking with the operators, just constantly talking, asking questions, more detailed questions, but still keeping that relationship going.
George, you're already doing a lot for the patients by this direct pay model. Is there anything outside of medicine you do to give back to the community?
Yes. So I'm definitely big on growing community. I feel like the events that I've started to put on this past year, it's really more towards growing a safe community of physicians. So I host a monthly meetup in the clubhouse of my apartment building, and I host biweekly webinars. And honestly, I just want to grow a strong physician community that's independent, financially free, autonomous. I'm trying to give value. I feel like through that mechanism, we'll have a better physician base to provide better care to more patients. And so that's kind of been my big effort just to kind of host those events, get comfortable hosting those events and building the community here in Houston.
So, how can people get in touch with you
I'm
to know
on all
more?
social media platforms. I have both my website for my practice, Movement Orthopedic Institute.com, and then my real estate investing firm, timehealthcapital.com. And then we have social medias for each of those. But the easiest thing is to follow me on my personal social media pages. That's where I'm most active. And I'm most active now on LinkedIn.
We are going to put all those links in our show notes along with this podcast so people can look at the show notes and get in touch with George. It was a pleasure having you. Is there anything else you want to tell our viewers and listeners before we end this podcast?
Oh, I just want to thank you, Roger, doing so much for the community. I encourage viewers to definitely follow you. You have great content, so I appreciate what you're doing. I'm really excited about the energy that a lot of physicians and other healthcare providers are showing now. We're realizing kind of where we can take this. And I'm just happy to be a part of that movement and help the community grow and reach higher heights. So thank you again.
Thanks, George, for coming on our podcast. You had several excellent points, which is very useful for physicians, both looking to go into independent practice and looking to go into real estate investing. Please contact George for any other questions. I personally know George. He's very, very helpful person. Overall, a nice person to know. Thanks, George.
Thanks, Raj.